Victoria, this is a market right now where it seems as though things are trying to broaden out. Do you feel as though there's still enough fuel in the tank for this so-called seasonal rally at the end of the year?
I think there could be, Dom, but a lot of it rests on these economic reports that are coming out. Obviously, we have initial jobless claims today. That's actually been driving the market pretty significantly over the last couple of weeks, and non-farm payrolls tomorrow. People really have their focus on the jobs market and on inflation because they know that's what's driving the next actions of the Fed. So if those numbers continue to come out in support of what the market is anticipating that the Fed has done and they're going to have rate cuts early next year, then I think the market continues to do well. If we have numbers that come out that are not as supportive of that, then I think maybe the Santa Claus rally might have come and gone for this year already, and we'll have to brace ourselves for a little bit of a pullback.
Victoria, consumer spending, the retail landscape is such a key part of the fourth quarter story for good reason because the U.S. economy is powered by consumer spending. Amazon CEO Andy Jassy offered a mixed picture when it comes to the consumer picture when speaking with our own Jim Cramer last night on Mad Money. Just take a listen to what he said.
Consumers are still spending. They're being careful about what they spend on, and they're looking for bargains and deals wherever they can, and wherever they can trade down on price, they're trying to do so. And
what does that say about the consumer and their confidence right now?
Yeah, he's right. I mean, obviously, this time of year, people are spending probably when they wouldn't be spending in a different time of year. The holidays bring that out in people. But I think what we have to watch is delinquency rates that we're seeing even now in this fourth quarter. Delinquency rates are up on credit cards, are up on autos, especially in that 18 to 29-year-old group where we also know that student loan debt's coming in. And Dom, this is in an environment of low unemployment, wages up 5% year over year. So I think it tells us the consumer is concerned. They're watching. I actually think earnings today will be an interesting tell because we've got two different consumer bases. We've got Dollar General and we've got Lululemon. So I think it'll be interesting to hear what those CEOs are saying in regards to their consumer base.
And Victoria, before we let you go, the word of the day, maybe not cautious, though.
No, cavalier is the word that I'm using for today. And I think the market has been acting a little cavalier in regards to what the Fed may do or not do into next year. We don't anticipate rate cuts as early as the market does. You know, the market's looking for the Fed to cut rates, but at the same time have double-digit earnings growth, have
Right.
GDP growth above trend. I think they're being a little cavalier in their outlook.